For more on the data, the economy, and a preview of the monthly jobs report tomorrow, let's bring in Jay Bryson, chief economist at Wells Fargo. A lot in your notes here, Jay. I guess what hit me was you think by September, through September and the end of the year, we get 100 basis points in cuts.
Well, that was our official forecast about a month ago.
You don't think so
I'd
anymore?
say the risks are probably a little bit skewed towards later Fed moving and not quite as much. But what I would say is, like, a year from now, I still think rates are probably going to be about 100 basis points.
But you're worried about the growth effects of tariffs.
I am. I'm more worried about that than the inflation effects. Now, I think it's premature to just completely dismiss that. But tariffs, at least in theory, should be like a one-off hit to the price level. What you don't want happening is those second round, getting into wages, moving inflation expectations, things of that nature. And, if the unemployment rate does start to come up later this year, which we think it will, as tariffs slow the economy down, then we think the Fed pivots and then starts to cut rates.
What do you make of this journal story today that suggests we could be getting less accurate inflation data because there are job openings at the Bureau of Labor Statistics or job vacancies that have not been filled, and as a result, we haven't been able to measure cities like Buffalo or Provo, Utah, or what was the Lincoln, Nebraska? Yes,
I mean, in general, I don't think it's not just necessarily the BLS, it's probably some of the other statistical agencies as well. And so it makes the Fed's job harder to be falling through that, we'll call it fog. And so consequently, I think what the Fed starts to rely on a little bit more going forward is some of the anecdotal evidence, like the Beige Book yesterday. Now,
and what they're hearing from their districts.
What they're hearing from their districts and things like that. But, again, it reminds me of a few years ago when the government was actually shut down for, I think it was 30-some days. Right. And all those statistical agencies were shut down. And this was a period of time, this was early 2019, when the economy was decelerating. Right. And the Fed was kind of flying blind at that time.
But do you write off the ADP number? It's not we can't just, we're not guaranteed. You're still at 125 for Friday?
Yeah, we didn't move it.
125,000.
125,000. The ADP on a month-by-month basis doesn't have a lot of correlation with non-farm payrolls on a month-by-month. Right? If you look over long periods of time, they certainly track each other pretty well. But I feel comfortable at 125 at this point. Maybe the risks are skewed a little bit to the downside on that, but I don't think we're going to be seeing the labor market just falling apart. We're not seeing that in terms of like the initial jobless claims moving up, but not spiking. And the anecdotes that we've seen again from the Fed in the Beige Book is you wouldn't think that the labor market is falling apart at this point.
I don't know. So it's going to be bad cuts that we get for you. They're not going to be good. It's good. Actually, it's a combination of good cuts and bad cuts. Good because the inflation is under control. Right. Bad because it's due to a slowdown in
the economy. Right. Yeah. I mean, we don't have the economy going into recession. Right. If you look at our forecast,
some people do, though.
Well,
right?
I know, and I would say we're skating pretty close to one. It wouldn't take another big shock to potentially push the economy into the recession if things are weakening later.
But then you're all excited. After that, right?
Well, I don't know if I'm necessarily excited.
No, you're excited. Deregulation, stimulate the effects of fiscal policy, monetary easing.
I think
you're ready to throw a party.
2026 is going to be a lot better year than 25. 25 is for us is more about the negative effects of tariffs. 26 is more about some modest stimulus coming from the fiscal side, monetary ease, and some deregulation.
And some deregulation, all the stuff that we were counting on until. I don't know, why were we blindsided by tariffs?
We should
not have been blindsided.
If you listen to Donald Trump a year ago,
20 years ago,
he was talking
maybe
about
30 with Oprah, I think.
Yeah, but if he had those views for so long and he didn't do it in the first Trump administration,
he did do it though, but he couldn't do it as much.
Yeah, not 10%. That's the difference. I think people weren't expecting more than that.
Yeah. It'll be interesting to see how much this actually sticks, right? I mean, one of those, the court actually put a hold on all this. Now, the appellate court came back and said, put a freeze on that, and it's going to end up at the Supreme Court, right? And we'll see what happens there. But there's going to be a lot of uncertainty between now and whenever those rulings come out.